Mark, is the Fed raising rates, is that starting to have an effect and bring inflation down?
Well, it is. And you see that across the board in some commodity prices. Lumber obviously has been on a downtrend. The building supplies, housing prices, rentals are on decline. And we've seen used car prices decline, which was, if you recall, was one of the big catalysts for that spring jump in inflation. So the Fed is working, it's tightening, and it's slowing the economy.
And how far do we go with this tightening? I mean, is their job almost done?
Well, that's difficult to say because while it is slowing, we're coming off almost an 8 handle on inflation, and they continue to say their target is 2. That's a huge drop, and we're going to need massive demand destruction to get there, and that's a lot of pain in the labor market. And there are some doves on the Fed that will not want that to happen, so it's going to be a real interesting dynamic. So the Fed policy really is in a gray area now, which is why for investors, I think it's a very uncertain time.
Do you like my idea of buying and holding a 2-year Treasury? You're laughing because I think you do like the idea. I mean, on a 2-year Treasury, you get 4.3%. 4.3%. If you hold it for those 2 years, you're getting that solid interest rate. You get a tax break on the interest. What could possibly go wrong?
Well, you're correct. And if you're in a high tax state, it's close to a 4.6, 4.7 after tax equivalent. And in 2 years, there's no default risk. If you hold to maturity, you get your money back at par, at least, depending on what you paid. And for a balanced investor, a conservative investor, or someone who's just been beat up by this market, who can argue strongly against that? Some of the risks I see are that if the stock market takes off in 6, 12, 18 months from now, and you're clinging to your 2-year Treasury, you might miss the early stages of what's hopefully another bull market. But certainly for a conservative investor, I'm not sure Treasuries are a big mistake.
Okay, maybe I'll come down to a 3-month Treasury and still get about 3%, and I'd be happy with that. Mark Avallone, thank you very much, sir. I know we'll see you again soon. Thanks a lot.